Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 15th, 2025. S&P 500 currently sitting at 64.53. I'm David Darling. I'm here with weatherman Ian McMillan. You still got rain by you?
Hopefully this weekend should be good.
Got to get the kids out.
It's rain for 2 weeks.
Got to get the kids outside.
Got to get the kids outside. Need some time in the sun, time in the pool. I'm ready.
I believe it.
Plus, summer's dwindling down here. School starts next week. So you got to maximize the final days.
That's right. Summers are great, but I think kids do well with school structure, not going to lie.
They do. I'm ready. It's been an awesome first summer. We have had child home. Obviously, our youngest is still in daycare year round. Been super fun, but yes, I am a little ready for him to get back. And I think he is too. I think he's ready to get back and see friends and get involved in the extracurriculars and all that good stuff.
Yeah, I believe it. Same with my kids. 2 oldest are off to college. Then we got 2 high schoolers. No more grade schoolers for me.
That officially makes you old. I think that's one of the rules.
No, I only have to agree to that, and I don't.
No, I'm teasing.
So, stocks. What do we see out there? What can we update our listeners from last week to this week regarding stocks, bonds, commodities, crypto?
Positive. It's going to be a positive week as far as major indices. Well, yeah, S&P's up. Russell had a nice week, right? Russell up. Had the big, what was that, Tuesday? Was that Tuesday had the big gap and run?
Yeah, Tuesday was the first 80% upside day since May 27th.
Yeah, so Russell, as much as a hard time as we give him, credit where credit is due, did have the best week, did make it out of its consolidation. Big move on Tuesday. Now sitting back where we were in early February. So has made some ground up, looks good. I guess the Dow is up for the week.
Well, and the Dow is, though, along with small caps hadn't made new all-time highs, but here we are.
Dow, yeah, look at Dow.
Couple hours from close, and we might get ourselves a new weekly closing high. That could be a big deal.
Yeah. So
not that you have to be in the Dow, but I mean it's a highly correlated index to the other ones.
So we've got Dow breaking the new highs. Russell's the outperformer on the week. Stocks have seen, again, okay, major indices, we've been sideways for 3 days now since Tuesday.
Mm-hmm.
S&P also breaking to above its July highs.
Yep.
I think you mentioned that. So it's all healthy, but boy, they are antsy out there. I get it. Individual stocks definitely have been hit today. Kind of another one today. One of those days. I would say a lot of the really strong stuff, momentum type stuff, has gotten hit. On the flip side of that, I think I saw Frank Capillari say we had 80% upside days this week.
Yeah, the first one. Now, the data I'm looking at for, and I think he was using S&P. And
okay.
what I'm using is NYSE. So using NYSE, we had an 80% upside day on Tuesday. But I think if you're using S&P like he was, that's Tuesday and Wednesday, 80% upside days. Not too shabby.
Isn't that fascinating? Because I buy the breadth right? The data is the data. There have been fewer stocks, making new highs and staying above certain moving averages as the indices have moved higher. I do wonder if this is a restart to breadth.
Yeah, could be. I mean, it would match seeing what small caps have done.
Mm-hmm.
And I know people get all weird about you can't just blanketly say small caps, our breadth measurement. But in a way, if you're seeing a broadening out of participation to the upside from 2,000 small cap stocks, and I would
Well,
even
micro
say,
caps got back to all-time highs.
well, I
Now
would
they've
say,
since kind of stalled out there. I
well,
take that back. Not all-time highs.
yeah, I would say like 4-year highs.
Yeah, I take that back. Back to the underside of, I mean, it's a pretty big level. I mean, it's the underside of this 2021 range, which is, yeah, probably not going to slice through that easily. That's a big one, especially given the move we have had into that range. We'll see, I guess, could happen.
But your point is made. I mean, if you get the Dow Jones making new highs, if the S&P made new highs, is NASDAQ holding its high versus the S&P? It's trying. And then you see what's happening in Europe, European financials. I mean, Germany is still strong.
I feel like Europe might be ready to make a second move here.
Yep.
We talked last week about the areas that had held up well. And yeah, I would definitely, you mentioned financials. I would definitely put them in that category. We mentioned some of the individual country ETFs that had held up well.
Yeah, Greece,
Spain, starting to see that.
Yeah. I mean, I don't know how bearish you can get if the Dow goes out to new all-time highs and you have things like European financials doing well. I mean, even Japan, new all-time highs. China, I know we've talked about China internally this week.
Japan. Yeah, look at that. And not to mention, right, we talked about Vietnam and Singapore, South Korea, Malaysia. I think Malaysia is doing, I cannot believe we get a Malaysia ETS, but we don't have trucking. But I digress. Yeah, if I had to look at a chart, I mean, it does, I do look at charts, and it does feel like Europe had their big move, Q1, Q2, kind of sat back a little bit, and now, I mean, they were fine on an absolute basis, but definitely underperformed on a relative basis. And now, and I should say not Europe, I mean, foreign developed is probably a better, right? Because you just mentioned Japan. But we'll see.
We will.
What about domestically?
I mean, domestic, it's the leaders continue to lead. You look at year to date, and your leaders year to date are communication services, industrials, tech, semiconductors, financials. Not necessarily.
Gosh, but you say industrials are outperforming. I mean, they are. Look at that. But it doesn't feel like it.
Well, it's because you snap the chalk line, right? It goes back to that whole like January 1st thing. Like when you look at XLI,
it really does bottom like relative, like mid-December. Yeah.
Yeah. So it's definitely not something that you can sit there and say, oh, that's clear as day that industrials is going to be a relative outperformer. It just happens to be where January 1st ended up for that particular sector.
And then XLF, I know we talked about, speaking of financials, we talked about, okay, so Russell kind of has made a move, but regional banks didn't really do anything. Like regional banks have not gotten to new multi-month highs. Biotech, on the other hand, has, depending on what biotech fund you want to look at, just interesting. I really thought banks would have participated more, regional banks that is, participated more in this big move they have moved, outperformed a little bit over the last week. Overall, relative chart is tough.
I agreed. It's, some things are more clear on a chart than others when you use a January 1st date. And I think it's interesting that the VIX is near the lows of the year. We're entering a seasonally weak period, this middle August into middle October. So this 2-month period, do we see seasonality play out and we have weakness in chop? Or do we have another scenario where are we going to get a melt up that locks people out? Because we were just a week away from talking about how speculators had built some pretty large net.
Yeah. And small caps, right?
Small caps.
Biotech.
Biotech. Yeah. We'll see where we end up by the end of October, but
could get melty.
Could be a melty, and then that would put people in a really tough emotional spot. Because if you raised a bunch of cash and hedged big time coming into August, and that starts to move against you.
But then breadth stays bad, right? Then you gotta. I mean, I could see breadth not necessarily improving a ton and markets melting up. Then you're kind of back into like the mega cap thing, bro. I assume could unfold a lot of ways, but
yeah, correct.
I would love for participation to pick up. You know, we still got Apple, that's been an underperformer this whole time that we talked about last week. That is now maybe wanting to emerge as an outperformer again. We'll see.
And we still have triple C credit spreads cooling off, so that's indicative of there's not a lot of credit stress. What do we? I mean,
well, and even take a day like yesterday, where what was the big news thing that came out yesterday? PPI, and so got everyone in a tizzy. Market kind of had its chance, especially early on, to really start a real sell-off, which I feel like everyone's been, for right or wrong, we're just waiting for. I would say wrong. I mean, you just like wait around and hope and predict that. It's kind of that like, markets are due. Like it's one of the worst things, one of the worst attitudes you can have when it comes to market. Markets are due for this. Markets are due for that. No, markets aren't due for anything.
Well, I think you brought up a really good point. I think it was this week or last week, just how there will be one last new all-time high.
Yeah.
But not every new all-time high is the top.
Well, and what do we tell? I mean, I tell clients all the time, whether it's a prospect, a new planning client, we walk through the same slides with everyone, and there's a very particular slide. It's got about 25 years of S&P data on it, and we talk about like, here's where you would be invested, here's where you're going to be in cash, and I feel like we're pretty upfront. I know I'm pretty upfront when I meet with new clients. Whenever that last new high comes, and we won't know that for weeks or months till after the fact, but we will be able to look back and say, whenever that new high did come, like you are likely pretty aggressively invested.
Right.
That's how trend following works.
Correct. Yeah,
and so we can sit back at all the new highs made this year, and I can say the same thing. You've been aggressively invested.
I think it's safe to say that there's more damage done by people trying to time the absolute top than actually allowing the trend to change and then remove yourself from it.
Yeah. And I don't want markets to roll over any more than the next guy. I mean, no one wants to see number go down, right? But that is a reality, and you just adapt for it. There are definitely days of underperformance, outperformance. I think at this point in my career, it's it's just one big, long, never-ending game, kind of, and I love that. I think I used to really get caught up on like the day-to-day stuff, but just being in the trend, be the ball, right? As you like to say, be the ball, be the trend.
Yep. And participate in it.
Participate.
There will be a downtrend. There will be another one. I don't know when. I wish I could tell people.
And don't forget what just had one.
That's right.
I think that's one of the most ironic things about society and the 5-second news cycle we're on is that people talk about going back to we just had a correction 3 months ago, 4 months ago.
Yeah.
Or people talk about we're due for it. We just had a 9-month bear market drawdown 3 years ago.
That's absolutely true. Well, and equal weighted Russell 1000. 5% return since November of 2021. Too far, too fast? Yeah, no, I get it. We can get into topics about, the Meg 7 are too large.
Yeah.
The top 50 stocks are too large. Maybe.
I mean, I don't know. That's not a reason for me to what am I going to tell my wife? We're not going to retire on time because the Mag 7 spooked me.
Yeah.
I'm not, I'll tell you that. I'm not having that conversation at 65. It's just participate.
Yep. Participate when it makes
Million
sense.
reasons. There's a million reasons to not every day. Million reasons to not own stocks. You can go on Twitter and find half of them if you want to look.
Mm-hmm.
You can turn on CNBC and find another half, the other half. It's my whole life, right? Your whole career been the same way. My whole career been the same way. Always reasons to not own stocks. Always a reason to be spooked out. What could happen?
Yeah, there's always a wall of worry, and sometimes that wall is stacked more than others. But man, just use price. And speaking of price, probably should highlight the support of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting apvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Anything else you want to cover equity-based before I pivot us to talk crypto or bonds or commodities?
No more ranting on equities from me. Yeah, let's talk about our crypto pals.
Yeah, I think this weekend will be interesting, and I don't mean that from some type of fundamental statement. It's just you look at something like Bitcoin, which tried to break out to a new high and now is back below the prior high with an RSI divergence. And you kind of see the same thing out of Ethereum.
Yeah.
You've got Ethereum tried to break out. Now that's above its 2021 high. The Bitcoin was more recent high. So we'll see, because the sentiment out there is pretty bullish on crypto, and we're supposed to go into alt season here, and it's going to be crazy.
Very high. Yeah. Well, and so Pratty brought up a good point on Twitter, or former intern Pratty. Go drop him a hello in his DMs if you have the time. He is off to a great start in his young career. He brought up the MSTR underperforming.
Yeah.
And that's right. That's your Bitcoin proxy, your higher beta Bitcoin proxy not performing. I would say those funds in general, your DApps, your BLOKs, what's the crypt one? Isn't there like a crypt?
Are you talking
ETF?
Oh, yeah.
CRPT?
Yep. Yeah. Yes.
See, none of those at all have participated in this kind of little, most recent rally in Bitcoin that we've seen over the last 2-ish weeks. Probably a clue there was Coin. It's a big failed breakout out of its base at the 345, 350 area, somewhere up in there. So the crypto linked stocks definitely diverging. Now you're kind of seeing the crypto failed breakout type moves.
And all those stocks that you're talking about are, I believe that the term is they're an Ethereum trust or a Bitcoin trust, meaning they're just going to hold Bitcoin, hold Ethereum.
Mm-hmm.
It's a newer terminology that I've heard that the crypto community is embracing, is this of these. And if those are underperforming, I think that's a fair, assessment to look at. Is that going to be crypto theory going forward? We have Dow theory when there's divergences. Is this a new theory developing?
Well, kind of like the gold miners and gold.
Yeah, exactly.
I think it's super valid. The high beta stuff, the proxy stuff tends to kind of peter off beforehand. And I would say on vice versa, when new uptrends are getting ready to start, your MSTR is probably going to move a little bit before Bitcoin does.
Yeah, I think it's a fair analysis for sure.
I don't want the uptrend to end. I don't want to have to go buy European stocks, but here we are. Might have to.
Yep. And that's okay. I mean, that's why we use relative charts, and relative strength is identifying where that strength is, and not necessarily a bad thing when you see strength out of these other areas. I mean, it's been over a decade of S&P dominance. I don't have a problem with this differentiation. In some ways it'd make our jobs easier. So crypto on the watch list. I know everybody wants to talk about rates. Interesting to see, when you look at treasuries using TLT, they're actually negative on the week.
Yeah, rates are up.
I think, in some ways the Fed's hands are tied, but that's not for me to determine. But I know the bond market's going to help them make that decision.
Yes, it will. Yeah, rates. I mean, right, that's been the whole story. I actually, for the first time, I feel like in months, maybe a few years, did not put a 30-year treasury chart in the client letter this month, which it's been a long time since I have not given clients that update. I'll probably have one here in September, but I mean, the story is the same. Like, if anything, I think that this consolidation over the last, let's call it 4 months, in like a 30-year treasury yield gives even more backing that rates might, at least the long-term rates, going higher.
Right.
The more you consolidate under the, kind of a breakout period, I don't see, it's the same as if it was any other asset. I would assume, and that, again, that's been the story on this podcast. It's been the story for clients. It seems like rates are going to go higher. The 40-year higher rate cycle thesis remains intact until it doesn't. And we're right into a 200-day. I know certain people in the government want lower rates. I mean, I just bought a house I would like to refinance here. That'd be pretty sweet.
Yeah.
But I don't know. Now they say that like the 2 years better for tracking mortgages. Have you heard that?
Ugh.
A 2-year treasury is better for tracking like what mortgages are going to do?
Maybe. I mean, I know LIBOR used to be a thing to track, but ever since they got caught.
Yeah, they got caught fixing that.
Yeah. Not so much anymore. I could see that being the case. I could see that being a good proxy.
And those have been down. I mean, those continue to kind of dwindle down. I mean, those have been down since last spring. Yeah. That was British dudes fixing the LIBOR thing, right?
Mm-hmm.
Well, I guess it is LIBOR. The L in LIBOR is for London, right?
Yep.
Yeah, so I guess that makes sense. But
so it's interesting. I mean, and I get why a government like the U.S. would want rates to be lower because they're refinancing a ton of debt coming up. I get it. But the bond market's going to set that price. I mean, they're going to set that rate.
They are.
Just reality.
You can't outmaneuver tens of trillions of dollars.
Yeah, it's the largest asset class out there.
Maybe hundreds of trillions. I have no idea. Okay, what about things that are going terribly? Like the Beyond Meat bankruptcy. Well, not terribly for people like me, red meat eaters, and my family.
Right. Well, who knew that fake meat wouldn't do well?
Shocked that Americans rejected your thesis of lab-grown meat.
So bizarre.
That was so weird. And man, they spent years pushing that.
They did. And now bankrupt. And the chart didn't lie. I mean, it wasn't like this happened overnight.
Yeah. This was a slow and steady, right? And it was your classic. I'm not saying they're all like this, but it was your classic. We're going to IPO it to the public. It goes from, it IPOs at 45, runs up to 235, 240.
And now we're
in a downtrend for, I mean, it's been in a downtrend since early 2021. Yeah.
Yeah, you go from IPO to bankrupt in 5 years for fake meat. Who knew?
Color me shocked, Dave.
Maybe the same thing will happen for Moderna.
We can only pray.
Because that's been in a downtrend since 2021.
But speaking of healthcare, Are you buying UNH?
Oh,
I
that's
mean,
so
Buffett bought it.
yeah, that's so tough.
Michael Burry's in. And he was really smart in '08. They made a movie about him.
Yeah,
So
that's a tough
are
one.
you gonna not you're not gonna jump on that trade with the guy they made a movie about?
Yeah, I think you could get a strong counter trend move here, but I think some serious damage has been done, and may just be the opening. The 2025 might just be the opening salvo for that particular stock.
Yeah, I think we were talking about it beforehand before we hopped on. It's the largest healthcare provider, managed healthcare, whatever label you want to get it, the largest or one of the largest in the world. I don't think anyone in this industry that's worth paying attention to thinks that this was going to go from $600 to $0 overnight or even in a year or two. But I'm definitely willing to go on record as someone who's not buying the long-term United Health Group, that this was some great entry point over the last few weeks, or even today with Buffett getting in and Burry and David Tepper. Could be a great trade even for a few quarters. This could trade well for a year. You could get, I don't even know if we get back over a 200-day moving average. I'm sure at some point we will. But yeah, I'm with you. I think this is probably a great reset over the next 9 to 12 months if you were going to short this stock. I think it goes lower. Maybe I'm just a biased anti-healthcare. Not that I don't go to a doctor, but
I guess the way
all of it, right?
The way I would say
stuff, yeah.
The way I would say it is, I don't think it's a short right now.
No.
I understand why people can get in and have some risk management. They better have a strong risk management on this one. But yeah, you could have a reversion to the mean of 40% higher and it doesn't fix anything. Like the damage has been done. And so if you were short, you might not want to be anymore. There'll probably be another opportunity.
You could just buy Gilead. That's a pretty sweet looking chart.
Yeah. You like it?
I like it. It's a great, the monthly's pretty sweet. Short term, you could probably, short term has got to break out on Tuesday. No, not Tuesday. Probably on earnings or something. Last Friday. I think it's a beautiful chart. But yeah, you can, I guess, buy the United Health.
Eli Lilly broke down last week, trying to recover this week. Maybe that's a false breakdown. Healthcare overall, abysmal on a relative basis, but holding up from a really big picture perspective. Like it's not at new all-time highs on an absolute basis. It's below a 200-day, but it's still sitting in the middle of the range that goes back to the beginning of 2021.
Mine broke down.
Yeah. Wouldn't bother me. Don't need to participate.
I don't want people to lose their jobs. I just want to see the stocks trader.
Yep. All right. Anything else you want to highlight before we sign off here?
So still in our seasonally weak period, I don't think anything about that has changed. Now, have we gotten indices to roll over yet? No. And maybe that's a clue. Right? We talked about yesterday. Yesterday was a great chance. Everyone freaked out. Markets finished green. And then you go back to the melt up theory, which is it even, I don't know if it's a theory at this point, because didn't you say last week on the podcast we gapped up like 19 out of 20 sections?
Yeah. And that's the other interesting kind of phenomenon is I in some ways the price volatility has been decent the last month compared to what the VIX has done.
Yeah.
Not necessarily matching up there.
Yeah, VIX doesn't seem to be buying it yet.
Right. So as always, we'll see. And you still have your risk management lines in the sand. Something like the S&P, you'd want it to hold its July highs. You want it to hold its February highs. You want it to hold a 200-day. Same with NASDAQ. Be great to see small caps really start to outperform here and finally break to, a new high, because it's a 0% return for small caps since February 2021. And we'll see what some of these crypto names doing. I think that's going to be telling in the next week or two here as well. That if they're not able to hold their highs, are we going to just get a consolidation near the highs, or was there some peak sentiment going on there on what the government was going to do, what it wasn't going to do with crypto? Got a little overextended. We'll see.
Yeah, maybe. I would love for it to be a consolidation, and we say, hey, see you in November. Hey, see you early November, man.
Mm-hmm.
You hang out for a couple months. I'm going to go participate in some other things. I'll absolutely be back. Just give me a ring.
That's right.
When you're ready to party. You don't even have to give me a ring. I'll see it on the chart.
That's right. When you see the party happening, you can always join in. And there's always that's what I love about markets is there's always opportunities somewhere. There's always an uptrend somewhere.
It's about to be European financials, and it has been European financials. Now on a relative base, you're getting another, you beg for something different than the S&P, Dave, and then it comes and
European-wide financials look good, man.
They do. Emerging markets look, now, yes, if you got China they look fine. Yeah, I just need to, I don't know. We'll get what we get, won't we?
We will. Well, Ian, thanks for doing this again with me. I hope you have a dry weekend so you can get outside, get some pool time with the kids before school starts. Thanks for everybody listening. Give us a high ranking on your platform of choice and share it with your friends. That means a lot to us. We appreciate it.
Have a great weekend, everyone.